Every single year, you bust your back, earn your paycheck, and then, poof, a massive chunk of it just vanishes. Not into your savings, not towards your future, just gone, to taxes. Nobody really talks about the actual mechanics of this, but we are exposing the great tax trap right now. And get ready, because this data is absolutely going to shock you.
50%. Yeah, you heard that right. The average working person loses anywhere from 30 to 50% of their lifetime earnings to taxes. Just think about the sheer gravity of that for a second. Half of everything you will ever earn in your entire life completely gone, just handed right over to the government.
But then we flip the script. 3%. While you're giving up literally half of your life's work, the ultra-wealthy can legally drive their effective tax rate down to as low as 3%. It's a staggering contrast, right? And it forces a massive question. How is this even remotely possible?
Section 1, the billionaire tax secret. Look, this isn't some random accounting accident. It is rigged by design.
Here's the brutal truth. Take a middle-class worker earning about $60,000 a year. After federal income tax, state taxes, Social Security, and Medicare, boom, 35% or more of their income is just wiped out. But the ultra-wealthy, they are sitting pretty at a near 0% tax rate.
And hey, don't just take my word for it. Warren Buffett, literally one of the wealthiest men on the planet, famously admitted, "I pay a lower tax rate than my secretary." When the guys benefiting the absolute most from this structure are calling it out, you know there's a seriously broken system at play.
And the numbers get even more extreme. $0. In 2018, Amazon paid absolutely zero in federal income tax, despite billions in profit. Elon Musk, Jeff Bezos, they've gone entire years paying little to no income tax. And they didn't break the law, they simply used the tax code exactly as it's written.
Section 2. How the game is rigged. Let's break down the mechanics of this and see exactly why the working class is being punished.
It comes down to this. When you work a job, you pay income tax, which hits the highest rates, up to 37% in the US. But when the wealthy make money, they do it through investments, categorized as capital gains, and that's capped at a maximum of just 20%. The system literally charges you a premium for trading your time for labor while offering a huge discount for just holding assets.
Plus, the wealthy employ actual armies of tax lawyers and accountants. Their entire job is to hunt down hidden deductions you and I don't even know exist. We're talking offshore accounts, massive business expenses, and incredibly complex depreciation schedules. Which begs the ultimate question, who really writes the tax code? Well, here is the really uncomfortable truth. These thousands of pages of complex loopholes aren't random. They are crafted by politicians working hand in hand with wealthy donors to protect their assets.
Section 3. Cheat codes of the rich. Let's look at the exact legal playbook they use to bypass the system.
First up, borrow against assets. The rich don't sell their stocks, they take loans against them because guess what? You can't tax a loan. Second, business deductions. They literally run their lifestyles through businesses, turning personal expenses into write-offs. Third, they absolutely maximize tax-advantaged accounts to hoard wealth completely tax-free. But one of the most insane cheat codes of all is real estate depreciation. This trick lets you deduct a property's theoretical loss in value to offset your taxes, even while the property's actual market value is going up. It's a paper loss that generates real-world wealth, allowing massive real estate investors to pocket rental income entirely tax-free.
Section 4, your tax reduction playbook. All right, enough exposing the system. It's time to protect your paycheck.
Here is your fully legal, actionable playbook. Step 1, maximize those tax-advantaged accounts. Max out your 401k or Roth IRA, it's your easiest legal shield. Step 2, start a side business to unlock home office and equipment deductions. Step 3, invest, don't save. Move cash into assets to unlock those lower capital gains rates. Step 4, educate yourself on the code. And Step 5, hire a tax professional.
Seriously, a good accountant doesn't cost money, they save money. Most people spend more time planning a weekend vacation than they do planning their taxes. Paying for expert advice is absolutely the smartest, most tax-efficient investment you can possibly make to buy back your own income.
Because here's the harsh reality. The system is designed to keep you working while the wealth flows straight upward. The financial game isn't meant for you to win simply by putting your head down and working hard at a traditional job.
The rich got rich by playing smarter, not harder. They know the rules of the game. Reevaluating how you view your income, your deductions, and your investments is the absolute first step to taking back control. You literally have to learn the rules of the wealthy before you can use them. So, now that you know the dark truth behind these statistics and how the tax code actually operates, you've got a choice to make. Will you let the system keep draining your wealth, or will you finally start playing by their rules?